Hey, welcome to the channel. In this video, I want to talk about the 5 things you need to know to buy individual stocks. Now, there's a lot of different ways to invest in the stock market. You can do mutual funds, ETFs, things of that nature, or you can buy individual stocks. And I think what a lot of people do is they start buying individual stocks as investments, but unfortunately, they really don't know what they're doing. Now, who am I? I was a full-time investor for many years, and I also started my career on Wall Street as an investment banker, where I worked for many years. So I spent a lot of my early career analyzing financial statements and looking at the stock market and evaluating companies and things like this. So over those many years of experience, I picked up a little bit of knowledge that I want to impart to you now. Okay, so the first thing is, I think one of the most important things that somebody needs to know to invest in individual stocks is how to read financial statements. And I would venture to say that most people, unless you have a financial background, where in my case I have an MBA in finance, and as I said, I worked on Wall Street for many years, so I read financial statements every single day of my life. Most people do not know how to read financial statements. And reading financial statements is something very basic that you need to know to understand a company's financial strength and to understand if a company is strong enough to be a good investment for you. Now, specifically, the financial statements that I'm talking about is you really have to know how to read an income statement, a balance sheet, a cash flow statement, a statement of retained earnings, and there are other, those are the basics, but there are other financial statements that you really need to know to be able to understand a company's financial strength. You don't have to have an accounting background to know how to do this. It's relatively easy to get a basic background in reading financial statements, and you can do that online. You can do it in YouTube, and maybe I'll make a video that talks about how to read financial statements, but it is very necessary. The second thing is just the ability to evaluate businesses and understand businesses. And you need a certain amount of business background and financial background to be able to do this. If you're a person who, I'm just picking something out, has a fine arts background, for example, and knows absolutely nothing about business, chances are buying individual stocks is not the right thing for you. Of course, if you're a business person and you have a business background, this is a tremendous background to assist you in looking at companies and being able to figure out what their business prospects are going into the future. The third thing is, and this is related to what I just talked about, you need to know something about fundamental analysis. Now, what is fundamental analysis? Fundamental analysis is the evaluation of a company's financial strength, its earnings power, and it has a lot to do with the first topic I mentioned, which is reading financial statements. A lot of the basic metrics that we look at in fundamental analysis do come from the income statement and other things. Examples of what I'm talking about are the PE ratio, price to sales, price to book. That's the book value of the company. You should know how to calculate that and what that means. Price to cash flow, return on equity, gross margin is another term you should be very familiar with, operating margin, EBITDA, which is basically cash flow before depreciation and interest, and then net profit margin is another example. These are all examples of the fundamentals of the business, and you really need some kind of a background in fundamental analysis to really know what you're doing when you're buying individual stocks. The fourth area that I think is important is you need to have at least some background in technical analysis. Now, technical analysis is really the study of charts, the study of market dynamics, and you need to be familiar with some of the basic techniques that are used in technical analysis. Some examples of these are, I'm just picking them out randomly. Bollinger Bands, okay, slow stochastic analysis, momentum in a stock, funds flow, in other words, how much money is going into stocks. And I've done some videos on these in the past, so you might want to look through the archive, so to speak, and I'll put some of those that I've done in the past on technical analysis in the description below. Now, you don't need to get deeply involved in technical analysis. If you're trading, yes, you need to know technical analysis more. But if you're a lot more of a long-term investor or even a medium-term investor, you really don't have to get crazy with technical analysis. But you should be familiar with some of the concepts so that when somebody comes on TV or when you look at it yourself, you know what you're talking about. Another thing that you'll hear frequently is the 50-day moving average or the 200-day moving average. These technical measures frequently can predict when either a market is coming back out of a bear market, say, or when a particular stock or the stock market in general is going to take off. And one other thing I want to just add to technical analysis, it kind of crosses over from technical into fundamental, is you should also be somewhat familiar with Fed policy and the overall market in general and the different measures that can tell the health of the overall market. That's also very important. And last but not least, I think this is very important, as important as anything else on this list, is you have to have the temperament and the interest to do individual stocks. I know many people that want to have exposure to the stock market in terms of long-term planning or retirement planning, etc., but they just don't have any interest in the stock market. Okay, the stock market's the farthest thing from their mind. They really have no interest in it, and don't kid yourself. If you have no interest in it, buying individual stocks really isn't for you. And the other aspect of this, and Warren Buffett talks about this all the time, it's temperament. Okay, you have to have a certain kind of temperament to be a successful stock investor. If you're the type of person that wakes up in the morning and sees a stock go down 15-20% and completely freaks out, or even 5%, and completely freaks out and goes, "Oh my God, I'm losing money," investing in individual stocks probably isn't for you, because it generally means that you're just reacting to the stock price and you really don't know what you're doing. You're really not convicted on the stock or on the company, and the slightest upset or the slightest decline in value of the stock will set you into a tizzy and make you want to sell the stock. That is really not a very good mindset or temperament for stock investing. If you're convicted on a situation, if you know what you're doing, you will be happy when the stock goes down, and this is what Warren Buffett says all the time, because it'll give you the opportunity to buy the stock at a lower level. Now, if you've determined after listening to this that you are the type of person that should be investing in individual stocks, great. Okay, my channel hopefully will be helpful to you in discussing issues that are related to investing and related to the stock market. I think it's a wonderful thing. I personally love doing it. But remember, you're not just buying stocks. You're buying part of a company. You're investing in a company. You're an owner in a company. And the way I look at it, and I know the way Warren Buffett looks at it, is that look at it like you're buying the whole company. Okay, look at it like you're a person that has the opportunity to buy the entire company, because for all intents and purposes, you are buying the entire company and its earnings power and its ability to create value in the future. So what are some of the alternatives for those of you who decide that you're not the right kind of person to buy individual stocks? And again, this is fine. I mean, many people in my family, including my wife, has absolutely no interest in the stock market, doesn't have a background in it, doesn't really care about it except to the extent that, we make money in it. But there are many people out there that have absolutely no interest, okay? So what you can do is either get a financial advisor, okay? But I believe that unless, you have a lot of money to invest, a financial advisor really isn't worth it or cost effective. When I worked at JP Morgan, the minimum was $10 million of investable capital. Okay, that was the minimum to get the top tier financial advisors that do that kind of work. People that take small accounts, $1 million, $2 million, while there are exceptions, those kind of people are not going to be the top people, because the top people do not generally take small accounts. Now, that's not true of everybody out there, so don't get mad at me in the comments if you're a financial advisor that takes smaller accounts. There are some great ones out there, but generally speaking, they're not the same quality as the guys that take the larger accounts. Another great option, ETFs, exchange traded funds, is something that trades like a stock on the exchange. They either track the major indices, or they can track individual sectors like energy, consumer goods. There's all kinds of different ways to invest nowadays that you couldn't do 30 years ago. It just really has opened things up. It's just incredible. You also have mutual funds. Vanguard, I love Vanguard. Vanguard's a very good company, has many mutual funds that you can invest in, which are large portfolios of stocks. Also index funds. Now, I can make a statement here that, let's say you want exposure to the stock market, either in your retirement account or in your personal account. You want exposure to the stock market, but you just don't want to do individual stocks. You don't have the interest or whatever. I think a great option is index funds. And honestly, if I did not want to get involved in individual stocks, what I would do is, out of the money that I allocated toward exposure to the stock market, I would pick two funds. I'd put half of it into the S&P 500, which is a broad measure of the market, right? And then I'd put the other 50% into the QQQ, which is basically the NASDAQ. Now, the QQQ is an exchange-traded fund that tracks the NASDAQ. Trades like a stock. There are many ETFs that, on the S&P 500 too, so you can do it that way, or you can go into an index fund. But that way, you get broad exposure to the stock market in 50% of your money, and then you'll get the growth largely of technology stocks in the QQQ. Great way to invest. You set it and forget it. Maybe you do dollar cost averaging. You just build it up over a lifetime of working, and it'll work great for you, and you'll exactly keep up with the market. Because remember, 80% of active money managers do not even keep up with the market. Okay, so what does that tell you? You will perform better if you just invest in the index. Set it and forget it, baby. It's a great way to go. And lastly, I'll just throw this thing in. Don't buy bonds. Okay? Even if you're an older person, bonds historically always underperform stocks. Always. So why would you want to be investing in something that is guaranteed to underperform the stock market in the interest of safety? Okay? You can get safety by investing in high quality blue chip stocks. Okay? The Exxons of the world, the Pfizers of the world, the Mercks of the world, JP Morgan. I mean, you are not going to, over a long period of time, you're not going to get hurt in those stocks. They're very conservative. They're the best in breed. And, this idea of investing in bonds, I think, is just crazy. It's something that evolved going back many, many years in money management. The 60-40 allocation kind of idea. Many, many smart people I worked with on Wall Street said the same thing. Never go into bonds. Okay? Just my opinion. Okay? I'm sure a lot of you may disagree, but that's my opinion. You'll always do better in stocks. Well, I hope this has been a help to you. If you got value out of it, please like and subscribe. And please stay tuned to this channel where you can get more content on the markets and related subjects. Sometimes I go into world events, but many times I'm talking about investments and the markets and related subjects. So thank you, and I'll see you on the next video.